We live in a bold new world right now, and the U.S. government debt has banged into the ceiling once more, $31.4 trillion. We'll wrap our mind around that in a moment. Plus, the fact that the U.S. office space environment, from a commercial real estate perspective, has gone to new boundaries in a way it may never come back from.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Hey, welcome as always to the Trending Report. Today we're going to be talking about the U.S. government debt, trying to wrap your mind around how large it really is and what it really represents for the United States. We're also going to talk about the commercial real estate environment, most specifically office space, what that really means about what's going on in business and therefore what is happening in the market. And then, of course, we're going to get into our traditional market data, which will be taking some visual representations based on data ending April 25th. So with that being said, let's jump in and talk about the U.S. government debt. Now, I'm going to use a visual that I have located here to try to help wrap our minds around this. So if this huge green block at the top of the page, if all of this was basically represented by single $1 bills, this would be 1 trillion $1 bills represented up here. And then for further perspective, this is a 747 here in the middle of that block to give you kind of visual representation of the perspective of how many $1 bills that really is and how huge that becomes. So that's $1 trillion. Now, keep in mind, the U.S. government debt is actually $31.4 trillion. So that block, if we bring that huge block and just put it right here in perspective, it represents this size right here. And the value of that is that next to it here, we're showing the Willis Tower. You may know that better as the Sears Tower. It's now called the Willis Tower. But the Sears Tower, if we had 4 of those blocks, that would essentially be the size of the Sears Tower. But it would actually take 8 of those. We have 8 of those, almost 8 of those coming all the way over here to the other end to fulfill the $31.4 trillion in terms of volume of $1 bills. So it would be approximately, let's call it 8 of the Sears Tower or the Willis Tower. Now, that's just a shockingly large amount that we just really can't even wrap our mind around. But here's the kicker. This is the problem that you don't always hear about in the media. So everybody has an impression about the fact that such a large debt volume is not good. Now, many will argue that you do need debt to a certain degree, and quite honestly, from an economic perspective, you actually do. Even though at your household level, it would be wonderful for you to be debt-free, at a government level, there is a certain amount of debt that does need to take place, and that's really what U.S. Treasuries are. That's how the government raises money in terms of debt, by selling U.S. Treasuries. So the issue, however, is at the end of 2022, it costs us $210 billion for the year to maintain the debt. So that's paying the interest on the debt. So that's about 15% of the overall government spending for the year. So it is an important debate that Congress is going to take up again, because they're going to have to raise the debt ceiling to keep us in business, so to speak. And that debt ceiling means that they're going to negotiate a package of some sort in order for the government to continue to issue out those U.S. Treasuries. Now, again, for further perspective, it's about $94,000 of debt per U.S. citizen. That's another way to look at all of this. So on the chance that the government cannot come to an agreement, then that means the government would shut down, which we've experienced periodically before. Excuse me. And if that was the case, obviously that will have a short-term impact on the stock market. The likelihood of that happening, probably fairly slim. generally we can get to the finish line and Congress will approve things and can negotiate such through. So that will be yet to be seen. Now let's take a little closer look at kind of what's going on a layer or two deep within business. And for that, I want to talk about office space. So we know that during the pandemic that many businesses ended up having to go remote if they were not what was considered to be an essential business, whereas people would physically stay on site even with mask mandates and all that other stuff that we went through during the pandemic. But what's happened is much of the white collar jobs have gone either remote or hybrid. Hybrid meaning they don't spend 5 days a week in the office, they spend something less than 5, and then they work remote or they work from home the other period of time. Well, that's created a lot of vacancies in offices, and a lot of offices are looking at it two different ways. A lot of businesses, I should say. They're looking at it from the perspective of, number one, can we get the employees to come back to a primary site, an office site, for work, for camaraderie, for simply networking amongst themselves and so on. And will that be viewed favorably by the employees? And many employees, as you've read in the news, are pushing back on that. And the argument is that some studies will tell you that people are equally productive at home as they are, or remote is probably a better way to say that, than as they are within an office setting. Again, another debate, depends on the person, dramatically depends on the person. Seasoned people can do better in those environments than, say, a new individual, a young individual coming out of college, for example, today, going into a white collar job. If they're working remote immediately, even if they're doing good work, their ability to train and be mentored and be noticed is a bit of a struggle when you're working remote, and that can affect your future career, obviously. Some people work very good remote. Other people get very distracted from a remote perspective, so productivity becomes an issue. All of these things are being kind of weighed out in the marketplace. But in the end, this is what's happening with office space. The vacancy rate has continued to climb. It's currently 18.6% of offices are vacant. And then this represents the new supply of offices. So office buildings, as you can see, the new supply is going down. So new office buildings are not being created near as rapidly. And yet, even with that decrease, we're still seeing a huge increase in the vacancy rates. So this is changing the nature of how business is operating in certain industries, and to probably to a certain degree across all of industries. So part of this is all getting digested in the market, trying to figure out how it is to run the businesses effectively and efficiently. Sometimes this is a really good thing, but you can save on those real estate costs, which could be an advantage to the bottom line, to the value of the stock. Other times, you're losing what you might be saving from an expense standpoint, you're losing in productivity. So every business in every industry must figure this out. So from that, we then jump into, well, what's going on in the market right now? And if we're looking at capitalization, small cap all the way through large cap, what we're seeing right now is that up here, it is the large cap stocks that continue to kind of drive things forward right now. It's the small caps down here at the bottom of the list that are kind of dragging us into more of a bearish tilt. All this red represents a bearish tilt. The green tends to represent a bullish tilt. As you can see right here, Nano, on the far right, we're seeing some red popping up. So things are turning a little bit, even though we've got green, even though the overall stock market by this blue bar right here is still coming in at a positive number. We are seeing it also turn Nano. It is flickering to the red side, to the bearish side right now. So what's happening here is, if we look at the long-term macro view, we are seeing that right in here or so, we started to turn a little more bullish. But right there, we're starting to see this is having an impact in the short term, and we're waiting to see now if that's going to change things. But as you can see, all through here, it has been a very bumpy 12 months in terms of the overall stock market. Now, if we take a look at it from a sector perspective, here's the equal weight of all the sectors, kind of right in the middle. We are seeing green across that board. But again, very choppy as we move across the overall graphic of this. But more importantly for the discussion, what's elevating the various sectors: consumer staples, information tech, telecom, healthcare, and so on. What's pulling it down right now? Energy, financials, real estate, which is REITs, and so on. So again, choppy perspective, mostly leaning a little bit bullish, but we are seeing some bearish tendencies starting to peek their way back in. From an international perspective, we're seeing a more bullish viewpoint. Notice there's quite a bit more green here on the international side, although there is a little bit of red starting to pop up here as well. And as you can see, we had this kind of V type of scenario that has happened on the overall international play. And right here, if we bring the macro down, you can see we turned bullish right about in here. And yet we did have a little trough here of nano where it went tilted bearish. It is currently bullish, but as you can see, it's drifting its way its way down right there. And then finally, we like to take a look at the bonds. And as you can see again on the bond side, mostly tilting towards the bullish. We do get a little bit of red taking place. This red right here just turned green. It's so small you can't even see it, but it just turned back green. And again, we had a little bit of kind of that V effect taking place when you look over the last 12 months. So right now, we're starting to see the bond market and the equity market start to split themselves a bit, which is a more traditional viewpoint in the marketplace, where if bonds are doing well, stocks are not, and if stocks are doing well, bonds are not. For a while there during the pandemic, they were kind of going in unison. We're now starting to see that deviation taking place again. So that'll be more to watch in the coming months. Thank you so much. Hope you've enjoyed this discussion. We'll be back together again soon.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.